Secretary of the branch, C. Anirban Pal, and today's resource person, very well-known and renowned person, and a very rich experience as a best branch chairman at all India level, CA Harit Dariwal ji, and MC members, past chairman, my senior professional colleagues, dear members, a very good evening to all of you and welcome to you, all of you. As you are well aware, in spite of this, we are all observing this TDS and TCS provisions. There are hundreds of crores defaults of tax defaulters are there in the TDS. So, to plug all these things, to have a better understanding and to have better knowledge and to the up-to-date provisions, today we are organizing this TCS Provisions seminar. There have been many changes in the TDS and TCS provisions in income tax law. TDS used to be a simple law few years back. Over the 3 years, TDS has become really tedious. There are a lot of interpretational issues in law, and every professional needs to understand it properly for effective implementation. Expansion of the taxation ambit has been a consistent practice adopted by the government every year. In Finance Act 2020, a new subsection was introduced, 206C of the Income Tax Act 1961 in subclause 1H, requiring the collection of the tax by the seller from the buyer on sale of goods. Further, in Finance Act 2021, a new section 194Q was also inserted to provide deduction of the tax 0.1% on purchase transactions exceeding rupees 50 lakhs a year. The new provisions applicable from 1st July 2021. Looking at the amendments made in the past 3 years, a message is conveyed that the government is not just expecting the taxpayers to do the businesses and pay taxes due on profits earned, but also deduct and collect the tax and remit them on a timely basis to make it easier for the government. However, all these changes have to lead a score of burning questions for the businesses and chartered accountants to grapple with. To understand the intricacies of the new provisions and interplay between the TDS and TCS, organized this webinar, which will cover the important TDS and TCS changes and other vital aspects. So today with us Harit Dariwal ji to cover all these details for better understanding and better compliance by all of our members. So with a few lines, now I request Andhar Sridharu to introduce the today's speaker, Harit Dariwal ji.
Good evening, dear members. CA Harit Dariwal ji is a chartered accountant with more than 14 years of post-qualified experience in statutory audits, internal audits, taxation, treasury and risk management, Companies Act, company law advisory, and project finance. Earlier, he was associated with Sterlite Industries India Limited, which is now renamed as Vedanta Limited, as an assistant manager, Treasury Department at Mumbai. He managed Indian and overseas treasury functions and handled investment portfolio of the group of approximately 7.5 billion USD, both onshore and offshore. He was involved in projects for raising and investment management of convertible bonds, ADRs. He had made arrangements for fulfilling short-term and long-term fund requirements for the company by raising the funds through packing credit, issuing MIBOR linked fixed rate NCDs or commercial papers and bank loans. At present, he is serving as a partner at Ashok Dhariwal and Co. Chartered Accountants, Ahmedabad, and involved in the statutory audits, including the listed company statutory audits, internal audits, direct tax advisory, GST advisory, project finance, and subsidy related RERA advisory. As a chartered accountant, besides being a chartered accountant, he is also qualified MCOM and then other certification courses from the ICA on GST, FAFD, and IFRS. He was elected as managing committee member of the Ahmedabad branch of WIRC of ICA for the term 2016 to 19 and 2019 to 22. He was elected as the chairman of the Ahmedabad branch for the year 2021-22, and under his chairmanship, Ahmedabad branch has won the Best Branch of India First Prize Award for members and students at both national and regional levels. Ahmedabad branch is the second largest chartered accountants branch in the country with more than 14,000 qualified CA members and 30,000 CA students. He is a regular speaker at various professional forums and have delivered lectures at various study circle meetings and branches of ICAI. He is a vivid learner and regularly attends almost all CPE seminars, study circle discussions on various topics, and reads various professional journals to keep himself abreast of the latest trends and developments. With these few words, I introduce C. Harit Dhariwalji to the August Gallery. Over to the speaker, sir.
Thank you so much, Sridharji, for the warm introduction. At the outset, let me first thank Vasudev Murthy. Thank you, sir, for inviting me to virtually to Visakhapatnam. I think I still remember in 2020 during the lockdown, I had come to Visakhapatnam. I think I can see Bharti Devi ji is there. When she was the chairman, I think chairperson, I had come virtually for the tax audit session. I remember in the month of October 2020. And after that, again, I'm coming to the beautiful city of Vizag, though virtually. So thank you so much, sir, for this opportunity. And thank you for the warm introduction. We are, I think, at a very nice juncture where, as a professionals, we have great professional opportunities coming up. Apart from the TDS, I think for those who have already started finalizing the balance sheets, they would have noticed that this year there are several changes in CARO 2020, numerous changes in Schedule 3, be it Division 1 or Division 2 companies. So a lot of there for us to learn. And in the middle of all these things, we'll be learning something on TDS. I think though tomorrow is the last day for TDS returns, but this is something which is an ongoing process. And TDS provisions are very, very relevant. As the chairman rightly mentioned that it has now become TDS in the true sense. Since last 2-3 years, there have been so many amendments. And I'm sure with the today we'll be having a lot of interactive session on the TDS provisions. I think we'll keep the chat window open. So if you have any queries, any doubts, you can put it there. We can discuss straight away. And I'll now just share my screen for the presentation. Yeah, sir. Is the screen visible, sir?
Yeah, visible, sir.
I'll just do the full screen.
It is visible, sir.
Yeah, just a minute, sir. Yeah, is it okay now?
Yes, sir. Yes, sir.
Okay, sir. So before I go on to the today's topic, I think let me start with a small story. I think I normally start my session with a small story because I understand it's an evening time. We all have had a wonderful Monday, after the weekend. So let us start with something which will be interesting to all of you. Something which is very, very much relevant to all of us. So I'll briefly start the story. So once there was a person who wanted to learn gun shooting, and there was he wanted to he was very impressed by all the famous gun shooters. So he approached an expert that can you please teach me gun shooting. So the expert said that okay, I'll buy a gun and license for you, and from next week I'm going out of station. Next week we will start the gun shooting sessions. So he brought the gun, rifle, and the revolver. He gave it to the person, and then he said, next we will meet at your house. There's a big backyard behind your house. We'll practice there. So after a week, the expert visited the premises of that person, and he went to the backyard. And when he went there, he saw that there were bullet marks on the wall. So the expert was surprised. He said, who did this? So the person who is yet to learn, he said that I only shot this. So the expert saw on the wall, and he could see that on each circle, each bullet, there was a circle of the similar radius. So basically, there was a circle, and in the middle of the circle, there was a bullet shot. So it's called a bullseye technically. So he said, how did you hit a bullseye? Did you go near and hit? The person said, no, sir. With the same distance at which you shoot in the Olympics and in all the competitions, same distance as shot, and it was a bullseye. So the expert was flabbergasted. He was literally surprised, shocked that after 25 years, even we cannot do this precision. We cannot shoot with this precision. How can you do this now? You have to teach me how you did this. So the person said, "Sir, you guys shoot and then draw the circle and then shoot. I shoot and then draw the circle." Friends, now in today's time, as a professionals, we don't have an opportunity where we can shoot and then draw the circle, because the circles are already drawn. The government has already made a lot of restrictions for the businessmen. You can see everything is getting linked now. The PAN, you can see the new AIS that has come in. It has practically every information about your business. And going forward, I think even the personal transactions, like if you purchase something from the Amazon or if you get something on courier, everything will be reflected in AIS. So everything is getting tracked. Circle is already drawn. Now it is for us as professionals to make sure that our clients, do it in the best of their businesses and in the best of the provisions of the act. So coming to today's provision, what I'm going to cover is, first of all, as the chairman rightly mentioned, 194Q is a burning topic. 206C1H is again something which is linked to it and a very important topic. We will cover each finance act. So like Finance Bill 2022, we have 4 or 5 changes in TDS. We will cover those sections. We will then go to the Finance Act 2021, where 194P and Q were introduced. Then in 20, there were a few amendments in 194A, J, N. We will go through that as well. And 2019, where there were IC and M introduced. So you can see in last 3-4 years, there have been major changes in TDS provisions. And now practically, if you see in 194, all the alphabets are covered. I think there are only 6 or 7 alphabets remaining. From A to S, they have covered almost every alphabet. So you can see the number of provisions are getting complex day by day. We'll cover recent circulars and notifications. There are a few circulars on TDS on recently on the functionality of 206 AB and triple C also will cover that as well. And then of course the concluding note. So before I think we go on to the topic, and just few slides for introspection. Normally what we earlier used to think that for that matter TDS or accounting or anything, we say that whatever happens in the accounting stays in accounting. Now those things are gone. I think you all would have read this report. This was a very important report. In 2015 it was published, which was again a CNAG had done audit of the tax audit reports that we are issuing. So for all the professionals, it's very important to know that in that report they have covered all the tax audit, all the issues that were they were there in the tax audit reports. They have raised those things, and along with the membership number and name of the members, they have also printed those things. So I'll just give you of what are the issues that that were there. So you can see here that they founded the cases where CAs failed to report full and correct information on 367 cases, leading to short levy of taxes of 2813 crore to 2,813 crores of amount. Then you can see there was other findings like depreciation was there was a issue with the depreciation in 66 cases. Then brought forward losses were wrongly considered. So all these things, whatever after the assessment, they say that there was a mistake of the tax auditor. You can see in 42 cases, personal capital expenditure was incorrectly allowed, as the tax auditor did not report the same in the audit report. So these are all the findings. You can see even the wrong exemptions were claimed that were being okayed by the tax auditor. So these all things were mentioned there. And the worst, I think I'll say the learning part from this is that when they publish these things, we should know that there are some mistakes which we should avoid as tax auditors, as professionals. You can see in this case, one of the case was that additional depreciation was allowed on plant and machinery, but the activity was of construction. So construction was not manufacturing, but that tax auditor by mistake or through oversight had allowed it as additional depreciation even on the construction activity. So these were things are reported. Now, when we talk about TDS, perhaps this is the thing that I wanted to bring to your knowledge. In this thing, they had reported that the tax auditor did not give a proper report on verification of cash payment. You can see that what the comment the tax auditor has given. He has given that we have broadly verified the payments on which TDS were to be deducted, while SSC had mostly complied with the law, but due to volume of transactions, we are not in a position to confirm that tax has been deducted wherever applicable. Hence, we recommend an ad hoc disallowance of 5 lakhs. Now, this was forming part of his audit report. Now, you can see that we cannot be so immature now. Everything is getting published. So, we have to be very careful. These are all the examples. I will share the presentation with the chairman. I think you can get the presentation. You can see the examples. But the point is now that we have to be very careful. Another important thing is tax audit review board. instituted, apart from the quality review board, the peer review board, they have also set up this tax quality review board. And the basic objective of this review board is to basically see about the issues in the tax quality report that are being issued. So we have to be again be very careful. Now coming to TDS, this is a recent data. In December 2021, they came up with this data where out of the total tax collection of 10.80 lakh crore, you can see TDS forms 4.93 lakh crore. So it's approximately 46% collection of direct taxes is in the form of TDS. Hence, TDS forms a very important part of the direct tax collection. So this, I think, as I said, current scenario in office, we all will be busy with our filings of TDS, and I think we all will have to now, file it by tomorrow so that we can all relax ourselves. So again, a few of the recent, you can see news items that IT detects TDS defaults worth hundreds of crores. So now I think even for the PSU banks, even the corporate companies, they are facing the heat that if they are not complying with the TDS provisions, the income tax officers are behind them like anything. So all these are the recent, you can see the notifications and press releases on that, and they are now actually even imprisoning the directors and the officers concerned. So these are all the news items relating to that. Quickly doing the overview of TDS, as you all know, is an indirect method of collecting direct taxes, and it combines the concept of pay as you earn and collect as it is being earned. So TDS is basically, I'll just quickly take you through all these payments for those who are fresh CAs or the students also attending this. You can see the provisions are applicable to a lot of payments. It's basically 3D deposit. It's a direct deposit and declare. It's a 3D concept as well as the TDS is concerned. Now coming to, I think I'll just go through the important time now. The due date we all know 7th of the next month, and for the month of March it is 30th of April. Now coming to the forms, I think 24Q, these all are, you all must be aware, so I'm just skipping this. Due dates also we are aware, tomorrow is the due date for the March quarter. Similarly, we have this due date of issuance of certificates. Now coming to certificates, I think we all should be aware that there is a provision that after submitting the TDS return, within 15 days we have to download and send the certificate to the deductee. Now if you don't download it within 15 days, in the budget 2022, they have also included a penalty of 1,000 rupees, 100 rupees per day of default. So now this penalty would be there. Now what happens, normally people say that everything is being there in 26AS, in AIS. Why the need to to actually have a TDS certificate issued? And we totally buy that point that it is not required. But as per the law, if you don't download it, 100 rupees penalty is there after 15 days. So better we can do this till the time it is not abolished. Now, why file TDS returns? I think we all are aware, because TDS ultimately we get the credit because of that. A few important sections. Now we all know these sections. I'll just quickly take you through this. 192A, premature withdrawal from EPF. 92B, 92. We all know about salary. 194A, interest. We know the limits for change now. 40,000 for the banks and post office, and for others it is 5,000, and 10% is the rate. Crossword puzzle lotteries is 10,000. The limit 30,000 is the rate. Now coming to 194C, the most important thing is a single transaction bill should not exceed 30,000. Aggregate during the year 1 lakh. The rate is 2% for firm and company. For individual it is 1%. Another very important section here is the commission and brokerage 15,000, and 5% is the TDS rate. For rent 194I, you can see for land and building 2,40,000, plant and machinery 240. The difference is the rate. In rent and land and building is 10%. For plant and machinery it is 2%. Now, a few important sections. I think we will just take the rate right now. We'll discuss the sections. 194 IA, transfer of immovable property. If the consideration is more than 50 lakhs, the rate is 1%. 194 IB is 50,000 per month rent. We will discuss this also. The rate is 5%. IC, I think very important. 45 5A was introduced before a few years, and any payment made under the JDA will have a the rate of TDS of 10%. Professional fees, as we all know, 10%. Now there's a change. For technical services, the rate is only 2%. For professional fees, it is 10%. For call center, again, it is 2%. 194N, we all know withdrawal of cash from banks and post office. The limit is 1 crore. Again, there was an amendment in this. We will discuss that. For those who have not filed the ITR, the rate is different. We will discuss that as well. Now coming to 194O, M is basically for for all the personal payments. Now this is something which is very important. We somehow missed this section. We will discuss this also later on. 194O talks about the e-commerce operator participant. Again, in that case, above 5 lakh, if there's a limit is there, we'll have to there's a TDS of 1%. 194R, which is introduced by budget 2022, talks about benefits of perquisite arising out of business. Again, it's a very new provision. And my first question when I read this provision was that it is very difficult to determine the amount. I will discuss that how it is, but the rate is 10%, 194R. S talks about the virtual digital assets. Again, a concept which was introduced in budget 2022. It talks about the VDA, section 115 VBH, which talks that any virtual digital asset, the rate will be 30% of taxation. And hence, even a TDS provision has been introduced now. So above 50,000, 1% is the limit. There are a few other exceptions we will discuss as in a section. And yes, the most important one, which we will start with, 194Q, TDS on purchase of goods. 50 lakhs is the threshold limit, and 0.1% is the rate of TDS. So till now, I think all good. I think we will just go. I think my just one question for all those who are attending. If I give you this as a promise, will you take it? I promise to pay a bearer a sum of 500 rupees. Will you take this as a legal tender? You can reply in the chat box. No, I think yes. Obviously, you will not take this. Similarly, you will take this. I don't know, will you take this or not? I think you will not take this also because it's an old note. Yeah, so the point is, this is what I was about to tell you. This was the old 16A. Especially for those new members who have not seen this, this is how old 16A were being issued. Everything was manual. You can write everything on that and you can still get it done. And now you can see the new 16A is all automatic. It is through the system, through CPC portal. So everything is generated well. So that's the difference now. The things are so automated well that you get the credit instantly now. So coming to TDS on sale of on the purchase of goods, 194Q. Now it's a very, very important section. It's practically applicable to most of the clients that we have. I will just take the provisions. Yes. So normally what we do is for any section, I think we also first go through the Band Act language. What is the language section about? Then we will take a few case studies and then we will take a few FAQs that the department has issued. So starting with 194Q, any person being a buyer. Now the first point is who is a buyer. We'll discuss that. Who is responsible for paying any sum. Now again the word is any sum to any resident. So here they have clarified that the seller should be resident. If a seller is non-resident, we are out of this section. For purchase of any goods of the value or aggregate of such value exceeding 50 lakh rupees in any previous year. So for the purchase of goods exceeding 50 lakh rupees shall at the time of credit of such sum to the account of the seller or at the time of payment made thereof, whichever is earlier, will deduct an amount of 0.1% of such sum exceeding 50 lakh rupees as income tax. So if you just broadly read this subsection, we get to know that a buyer is responsible for deducting TDS at 0.1% if the purchases or the payments exceed 50 lakh rupees in any previous year. It's a very, very simple section if you read this subsection 1. Now, who is the buyer? Very important. A buyer whose total sales, gross receipts or turnover from the business carried on by him exceeds 10 crores during the financial year immediately preceding the financial year in which the purchase is carried out. So, for example, we are in the financial year 22-23. So, you have to see the financial year 21-22, whether in that financial year, as a buyer, your sales or gross receipts or turnover exceeded 10 crores or not. So, the first question comes in, what if I start my business in the current year? What if I start my business in the month of May 2022? Whether I am liable for TDS, whether TDS is to be deducted, my likely receipts are going to exceed 10 crores. So, what is your opinion? Whether TDS will be deducted? In case of new unit established now, you can give your answers in the chat box. Okay, so Ashok is saying no. Anyone saying yes based on the projected revenue or something? Yes, so answer is obviously no, because in the previous year the existence of business was not there. Hence, we are supposed to consider today's year, current year as the first year, hence not be applicable. Now, as this is broadly, as I said, 0.1% of the aggregate exceeding 50 lakh rupees, 10 crores the limit for buyer. If there is no PAN, then TDS will be 5% and not 20%. Section 206AA, which has specific provision that if there is no PAN, only 5% TDS will be deducted. Now there is always a confusion whether 206C1H will prevail or 194Q will prevail. We will discuss that also going forward. Now, first, one of the questions in the FAQ that government has clarified that whether GST whether on GST TDS will have to be deducted. So the question is, if I purchase 100 rupees plus let's say 5% GST, 105, I have to deduct TDS on 105 or 100 rupees. That is the first question. If you can answer, will GST amount be included on GST for the TDS? Again, no. Okay, 100. Okay. No TDS on GST. Yes. So very rightly no TDS on GST portion, because even if a circular says the same, yes, and for all the TDS provisions, you have to be very specific that the taxes portion will not be included. What about purchase returns? So if I make a purchase of 100 rupees and I have a purchase return of 10 rupees, I have to collect TDS on 100 or on 90. Obviously, purchases is made in the month of May. The purchase returns is in the month of June. Then what will be the scenario? 100 or 90? So Dinesh ji answers 100. Okay. Even with the view of 90. So everybody is saying 100. Okay. So basically, government has clarified in the clarification that yes, there will be no adjustments. But what they have given a window is that in the next purchases, for example, I have a purchase in the month of May wherein I have 100 rupees purchase. I will deduct TDS on that. If I have purchase in the month of June, then for the purchases of the June of the same party, I can adjust that purchase in that and then pay the TDS amount. So that clarification government has given in the circular. Now, so this has been answered here. I can just share it to you later on. Now, can a non-resident be a buyer under 194Q? Now, at this section, resident seller, but for buyer there was no compulsion like resident or non-resident. So whether a non-resident can be a buyer, because what will happen? There are a lot of people will be exporting goods outside India. So if you are exporting, you are a seller, but there's a buyer outside India. Whether he will have to comply with the provisions of 194Q? Whether non-resident can be a buyer under 194Q? You can answer in the chat box. Yes. So Krishna says yes. Anyone with the no? Sridhar says yes. I think my job here is to confuse you and get it right. No, as far as Sridhar is saying. Okay, so I think the answer here is no. You are right when you say yes, because as per the provision there is no restriction. But in 194Q subsection 3, there is a provision where the government can to remove difficulties, they can come up with the clarifications of provisions, and they have done this recently. As I gave you an example, an exporter, if he is exporting goods, the non-resident is supposed to comply, which he will not. So hence government has come up with a clarification, and they are saying that the provisions of this section will not apply if a buyer is a non-resident. They have clarified this because I said to remove difficulties, they have this power, and hence non-resident buyer need not comply with 194Q. Now, as I said, okay, when whether TDS is to be deducted when the seller is a person whose income is exempt. Now, again, normally they have clarified this very like they have done in 206C1H, that if your income is totally exempt, 100% exempt, in that case, TDS under 194Q is not applicable. But even if a part of your income is taxable, then 194Q TDS is applicable. They have clarified this, and I will just reproduce that. What about this? Whether TDS is deducted on advance payment. Now, here we will have an interplay with 194Q and 206C1H. So 206C1H, we will go there, but before that, I'll just tell you it is on the receipt of consideration. Here it's a different method. So whether you will say whether tax will be deducted on advance payment. For example, if I make a payment of 100 rupees, my purchase is to happen next month. Whether I have to deduct TDS in this month. Whether TDS is applicable on advance payment. Okay, so Krishna says no. So I think the answer is yes, because again the same concept of payment or credit, whichever is earlier. We have to say that if the payment is done earlier, even then TDS is to be deducted, and even if the payment is not done and only purchase is done, then also TDS is to be deducted. So whichever is earlier, we'll have to clarify that. So even on advance, TDS will be deducted. As I said, in the year of incorporation, 194Q will not apply. We have already discussed this thing. Okay, now turnover of business. Now what they have done is that if your turnover of business is 10 crores or less, but you have other income of let's say 3-4 crores, which makes your total income go about 10 crores. In that case, again they have clarified that in that case TDS will not be applicable because turnover only from business is to be considered. If that is 10 crores and above, only then TDS will be applicable. They have clarified this thing again. So I think majority things we have discussed on this. Now coming straight away to TCS under 206C1H, and then we take an interplay and questions on these two sections. So when we come out TCS, I think a lot of us were not aware that there was a section 44AC and 206C still there, which was introduced in the Finance Act 1988, which talks about and the presumptive taxation for TCS, and in that case, Supreme Court had held that you can say that you can see the bold portion that I have written. The court held that the standard by which the amount of tax is measured, being the purchase price, would not alter the nature of basis of living in any way. So basically, they mentioned that this is a machinery is only a machinery provision, not a charging section. Hence, purchase price as a measure of determining income tax can be done. So post this provisions, TCS provisions were introduced, and I can just show you this. This is a chart. Yes. So in TCS, we see there are section 206 1C, 1F, 1G, and 1H. So we all were earlier used to this sale of alcoholic liquor, tendu leaves, timber, which all have a rate of 1% and 5%. Depends upon which category you fall into. And for the COVID, they had given this benefit of 75%, 25% rebate. Now coming 206C1C was about parking lot, toll plaza, and mining and quarrying. 206C1F, very important, sale of motor vehicle, 10 lakhs above in 1% was the TCS collected. 206C1G and 1H, they were the recent new amendments which are reduced. Now, first about the authorized dealer, I will quickly tell you. It's a section in which if you are remitting any money out of India through LRS, through the liberalized remittance scheme, you will be aware that I think under LRS certain amount is allowed to be remitted outside India. In that case, the AD banker, your authorized dealer, will collect TCS at the rate of 5%. And the limit here is 7 lakhs. So if you remit any amount above 7 lakh rupees, 5% TCS is to be collected by the AD banker. Now coming to the overseas tour program, normally people confuse that the 7 lakh limit is for both. No, the 7 lakh limit is only for the LRS, remittance and LRS. For the tour package, even for a 10 rupee or a 20 rupee or a 100 rupee or a 1000 rupee, any package, the TCS is to be levied. So even if you, let's say, go to a Thailand for a package of 2 or 3 lakh, and you are falling on the definition of as prescribed in 206C1G, in that case TCS will have to be collected at 5%. 206C1H, TCS on sale of goods. We will now straight away go through that. As we read the section 194Q, similar 206C1H we will read now. Every person being a seller, again the word is seller, we will know who is the seller, being who receives. Now you see the difference here. The word is receives and not the purchase of the payment. Who receives any amount as consideration for sale of any goods of the value aggregate of such value exceeding 50 lakh rupees in any previous year. Other than goods being exported out of India, so goods being exported are out of 206C1H, and other than those covered under 1F and 1G. So we discussed what are 1F and 1G. 1F covers the sales of motor vehicle, and 1G talks about the authorized dealer and the LRS. Other than these, shall at the time of receipt, so they are very carefully defined. At the time of receipt of such amount, collect from the buyer 0.1% of the sale concession exceeding 50 lakh rupees. So 206C1H is very clear. It is on the receipt basis. So even if you make a sale of, let's say, 10 crores in a year, and you have 10 crores of debtors, in that case, you need not collect any TCS because it is only on the receipt of your amount. Alternatively, if last year you have made 10 crores, this year you have received 10 crores without any further sale, in that case, TCS will have to be collected because it again is on the receipt basis. So now again the same thing. If you don't have a PAN, then 5% instead of 20%. Now coming to the definition of a seller. Who is a seller? Will go there. Okay, who is a buyer? Buyer is someone. I think we all know the central government and these are not included. Even the person importing goods into India is not a buyer. Now the most important definition of seller, similar to what is in 194Q, total sale, receipts or turnover exceeds 10 crores during the financial year immediately preceding the financial year in which the sale is carried out. So the same limit of 10 crores is there for the seller as well. Now again, for meaning of goods, there is no particular definition in Income Tax Act. So there are two options. Either you go to Sales of Goods Act, or normally everybody goes to the Goods and Services Act. So there are the options, but based on that, a lot of clarifications can be done. Now we will quickly go to the FAQs. As we discussed, who is liable to collect tax? So one who is having a turnover of exceeding 10 crores and the receipt is more than 50 lakhs in the financial year. We have just discussed this, all these things. Now coming to the timing also we have discussed. I'll straight away go to the important points now. Is a non-resident selling goods from outside India required to collect tax at source? Again, they have clarified that the buyer excludes the person importing. So if suppose you are importing something, in that case, the non-resident is not liable to collect TCS. Goods definition, I think we all, it's very specific. I'll just share with you this presentation. You can get through it. We'll go to the important ones. Okay, sale of immovable property, whether it will be under under the TCS, because immovable property is not goods. So TCS will not be levied on the sale of immovable property by a developer. Motor vehicle, again, motor vehicle, if it is covered under 206C1F, then here it will not be covered. Otherwise, it will be covered here. So for all the second-hand sales and all, I think here TCS will be collected. I go to the important points now. So resale of goods, yes, even if you resale, I think TCS will be applicable. Okay, whether additional allied or out-of-pocket expenses form part of sale consideration. Again, it was clarified in the department by the department circular that if they are recovered separately and if they are not a part of the invoice, then in that case TCS will not be collected. But if they are part of the same invoice, in that case TCS will be collected. Now, I think there's a question in the chat box. If a transaction is both within the purview of 194Q and 2061H, then TDS will be deducted under 194Q and not TCS. Okay. If other party has charged TCS by mistake, whether it is compulsory to deduct TDS under 194Q, so a very, very relevant and a very practical query that he has posted. So normally what happens at the start of the year or when transactions are taking place, the buyer and the seller, they have an understanding that if my transactions are going to happen more than 50 lakh rupees, then ideally I will have to deduct TDS. In that case, TCS is not to be collected. That happens at the beginning of the year or whenever the parties decide. But in case they have levied TCS, in that case, you're not required to again deduct TDS. Again, the government has clarified that this provision is basically the rate is again, you can say 0.1% only. So the intention is to make sure that parties disclose the transactions. So if the TCS is by mistake or they have charged the TCS, then it is not compulsory for you to again deduct TDS under 194Q. But yes, government has clarified this also, that the priority is 194Q and then 206C1H. I hope I have answered your question. Yeah. Rate we all know it's 50 lakhs. Okay. Again, now the question is whether TCS is to be collected on the advance. Now, again, the point is that we have to see the provision again. TCS is on the receipt of the amount. So even if you have received an advance and the sale happens in the next financial year, in the earlier financial year when you have received the amount, in that case, TCS will have to be collected. On receipt, yes. So Ashok has rightly answered that. Okay, now this is the question that we all had faced last year before when we introduced that whether it is to be on the invoice value, including GST or excluding GST. Now, again, we have to be very clear, a very simple language. If we talk about TDS, TDS has to be everything without the indirect taxes, only the basic value. But here they have clarified in the circular also that since the section talks about the receipt amount, in that case, the TCS has to be collected on the amount, including the GST. So whatever you receive on that portion, TCS will have to be collected. So it is very clear. Now again, there are two modes of levying TCS. When the TCS had come for the first time, there were a few players, few persons who were including TCS on every invoice. So suppose I sell normally to Vasudevji, I sell every month. So in every invoice, I collect TCS, irrespective of whenever he makes me the payment. That is one of the options. Second option, that no, whenever he will make me a payment, I will raise a debit note for the TCS amount for the entire month once together, like in the entire month combined together. So there were two practices prevailing. Whatever is right, wrong, does not matter. But normally what happens that we have to see one thing, that TCS and TDS under 194 206C1H and 194Q are to be renewed every year. So this 50 lakh limit is renewed every year. It's not a continuation thing. So suppose if you just on the accrual basis, if you just keep on collecting TCS in that year, you're not liable. Then next year you get a fresh limit of 50 lakh rupees. But I think it depends upon how convenient it is for the clients. There are a lot of clients who do the earlier practice, wherein on every bill, if they know that the amount is exceeding 50 lakhs, every bill they start collecting TCS. And there are a few clients who have the system wherein for the entire month they collect on there is a single debit note for the entire month, whatever the amount is received, make a 1% TCS and pay it for the 7th of the next month. So both the things are both the options are workable. Depends upon how the business model is and how convenient it is for the client. Okay, now coming to the okay, this all things we've been discussing, we have already done this. Okay, now again they have mentioned this in case of any debit or credit note, it does not matter if you are receiving the amount, TCS will have to be collected irrespective of that adjustment. Can a buyer apply for lower deduction of TCS? Now, lower collection of TCS. Now, this question came in when last time we were, was addressing this question. It's a very simple thing. It is only 0.1%. Now, what a rate can be lower than 0.1%? It can be either 0% now. So the rate is already low, and plus the section 206C9 does not extend the benefit to this section. So we cannot apply for low deduction also. In case you say that I have a loss and I cannot bear it, so in that case, there is no provision of applying for a lower deduction than 0.1%. Now, how to deduct deposit? We all know. Failure to consequences, this all know. So these, I think this everything will be shared. So I'll just take the main pointers. TCS due date we all know. Very important. People confuse it with the TDS date. TCS is 15 days ahead. So for the quarter ending March, it was 15th of May and not 31st. So next quarter is 15th of July. So every 15th is the date for TCS. I don't know why they're keeping it separate, but yes, as of now, the dates are separate. Non-filing, I think we all know it's a simple thing. So now this is the comparison. Yes, this is a chart which is basically talks about a comparison of 194Q and 2061H. We will quickly take through it. Who is liable for deduction? In 194Q, buyer, and 2060 is seller. The turnover is in both it is equal, like 10 crores for buyer and 10 crores for seller. Again, 50 lakhs is the amount of purchase or the payment. Here 50 lakhs is only the sale receipts, the receipts that we get. Rate is 0.1%. Amount exceeding 50 lakhs in both the cases. In the sale, it is consideration exceeding 50 lakhs. Time of payment or credit, whichever is earlier, normal TDS provisions. And in case of 2060, we can see the time of receipt. There is no accrual here, only the receipt basis. And preference, as I said, as someone asked the question also, that the question is first preference will be 194Q and the second preference will be 2061H. Now, just a minute. Yeah, this we have discussed. Now coming to each finance bill wise, what we'll take is now we'll take the important sections. I think we will start with the finance bill 2022, which has recently become in 194 IA. 194 IA, I think I've just mentioned here from which date is effective. So it's already effective. The change, we will discuss that. 194 IB talks about TDS on rent. 194 R, newly introduction on the TDS on benefit of perquisite in respect of business or profession. 194 S talks about the VDA, with a virtual digital asset. 206 AB, there's an amendment here. 206 CCA is again an amendment. So last two sections you can see there are amendments of the existing section. And this is how the finance bill provisions work. So I'll just yeah. So 194 IA, I think in a very simple words, we just read the first paragraph. It talks about 194 IA. Any person being a transferee responsible for paying to a resident transferor any sum by way of consideration for transfer of immovable property shall at the time of credit or payment, whichever is earlier, deduct an amount equal to 1% of such sum or stamp duty value, whichever is higher. So we all know if you are buying any property, any immovable property, if you are a transferee, the one who is selling, you are a purchaser, I will deduct TDS at the rate of 1%. Now the point here is 1% of the consideration. So earlier what used to happen, my stamp duty value is, let's say, 60 lakh rupees, but I am doing a transaction, my actual sale consideration is only 45 lakh rupees. In that case, I was out of the provisions of the TDS. But now they have clarified that your actual sale consideration or stamp duty value, whichever is higher, is to be considered for the purpose of TDS. Now we will also discuss the rationale of why of doing this. I think I've just mentioned the next slide. So, you know, any person, resident 1% is just a brief of the section. 50 lakhs is the amount of stamp duty is the value of seats. Now, stamp duty value is the same as given in the explanation to clause 7 of 56(2). Now, you can see here the rationale. In the Memorandum to Finance Bill 2022, they have given this rationale of why this was done. Because you see in 43 CA, in 50C, everywhere they have this comparison of, you know, the sum credited or paid and comparing it with the stamp duty value, whichever is higher. So hence they have brought a similar provision even in the TDS. So now next time, whenever you are, advising your client on rejecting TDS for sale of immovable property, make sure you also compare the stamp duty value of that property along with the actual consideration. Now, again, a question that I would like to ask you is that, for example, if there is a I think you all would have filled in the form 26QB for this TDS. So now my question is, suppose there is no PAN card of the seller. In that case, whether TDS will have to be deducted 20% or how will be the things will be, how things will be. So I hope we all are clear with the section 194 IA. TDS at 1% will be there on the purchase of any immovable property. Now, if suppose the seller does not have a PAN, in that case, what is the rate of TDS and how do you go about it? Yeah, you can reply in the chat box. Let's keep it very interactive. Anyone would like to answer? If the PAN number is not there, then how TDS is to be done here in case of immovable property? Higher of tax or 20%. Okay, Avinash ji is saying about higher of 20%. Okay. Okay, so a very interesting thing. I think for those who have actually filed 26QB, they will know that there is no option of deducting TDS at 20%. Yes, so as Ashokji rightly mentioned, there is no, sir, I agree that there is no TAN required. So when we say that no TAN required, there is a specific provision under 26, like there is a specific form 26QB. It talks about the TDS form to be done when you are, filing this TDS under 194 IA. But my question is, the seller does not have a PAN. In that case, 20% is what the act says. You are right, Avinash, in that sense. But when we actually go down and fill the form, it is not allowing us to deduct 20% because if the seller PAN card is not mentioned, PAN number is not mentioned, the form is not filled only. We cannot go ahead without putting in the seller PAN card, PAN number. Even if we cannot write PAN not available, we cannot write anything in that sense. So it happened with one of the cases recently when there was a farmer. He's not required to take PAN number also, but he was selling a land which was again supposed to be under 194 IA. He had to apply for a PAN. We had to then deduct 1% only. So even if we have an option of paying 20%, you cannot pay because the form will not allow you to pay. So there's a practical issue that I want to discuss with you. Now 194 IA will discuss. Now coming to 194 IB, TDS on rent. So we all know in this case, any person being an individual or HUF under other than 194 I, obviously, if you are covered under 194 I, then you're out of IB. So other than 194 I, for example, if a salaried person, if you are a person who is not having business profession or not falling under 194 I, in that case, if you are paying any rental income, any rental expense exceeding 50,000 rupees for a month or a part of a month, in that case, you have to deduct 5% of such income as TDS, and they have clarified in the last month of the year in which you are paying the rent. So they have clarified this that, for example, if you're paying, let's say, 60,000 rent every month, if you're a salaried person. So if your total amount is, let's say, 7,20,000, so in the month of March, you deduct 5% and then pay the TDS. And they again, as Ashokji rightly mentioned, was separate return for 194 IA, there's a separate return also for 194 IB. So you have to file the return and you can, the other person can claim the TDS. So what changes, what's changed here is in the provision is, you can see here, they have removed 206 AB. So what they've done is 206 AB we will discuss. It talks about that if you don't file your returns on time, then TDS has to be deducted at twice the rate, in that case. So that provision is removed from this. That if suppose I am deducting TDS of someone who has not filed the returns, then I am not supposed to deduct it twice the rate. I will deduct the normal rate only. So this is a change again in section 194 IB. Again, rational, as I said, that they don't want to have an additional burden on individual and HUF who are covered under 194 IB, because as such, this is something which they are complying, which they are not supposed to comply earlier. So they are not wanted to give an additional burden to them. Now, before we come to 194R, my first question again to all of you, I think we are not meeting physically, but let us have it very interactive session. Now, I'll just ask you a question that suppose, let's say in 194C, my turnover from business is, let's say, 1.5 crores, and I'm not subject to tax audit because my cash receipts and everything is under control. So I'm not supposed to do tax audit. In that case, whether 194C provisions will be applicable to me, my turn or any TDS provisions, my turnover is, let's say, 100. Second, I'm not subject to tax audit. In that case, whether TDS provisions will be applicable. So Ashokji mentioned that they are applicable. Okay. But I'm not subject to tax audit. Anyone having any other opinion? Yeah, I think you can guess, not a problem. You can just share your views, whatever you have. They are applicable once you cross 1 crore limit. So Ashokji very rightly mentioned. Now, this question. The point of raising this question was that in the earlier seminar also where I took, there were a few members who were having an apprehension that that not apprehension but having a belief that the limits under these sections are linked to 44AB. So as earlier you can see, if you read section 194C or J or H or whatever, you can see there that they were subject to only if individual and HUF they fall under the limits specified under 44 subclause A and subclause B. That means that they were linked to the 44AB. But since last 2 years, they have removed that. They have directly mentioned that if you are having a turnover of exceeding 1 crore and business professional receive exceeding 50 lakhs, TDS will be applicable. So there are cases where your turnover of 5 crore to 6 crore, you're not subject to tax audit, but you will still be required to comply with the TDS provisions. This is very, very important because a lot of people, they say that my clients are not in the tax audit, I'm not liable for TDS. So that is something which needs to be clarified. Again, if you read this section, you will see the difference of wordings. Earlier it was linked to 44AB, subclause A, subclause B. Now they have removed it and they have monetarily valued, put in there 1 crore and 50 lakh as a limit. So you can mention that. Now coming to 194R. Now imagine, I'll give you an example to just explain this in a very short nutshell. Suppose I'm a businessman and I happen to, and I'm dealing with Vasudevji. He's in Vizag and he's a very prominent businessman there. And suppose I'm telling you that I want to purchase goods of 100 rupees worth from him, and I tell him, please give me discount. At least give me some discount, sir. I'm taking a session at your branch. Do give me some discounts. So in that sense, rather than giving discounts, what sir does that, if you come to Visakhapatnam, I will manage your stay. I will give you flight tickets. I will give you a lot of intangible benefits. I will not give you a discount, but I will give you these benefits. So if now what happens, I go to Visakhapatnam, I visit his factory, I purchase goods from him. So my stay, my accommodation, my food, everything is being borne by Vasudevji. And what he does it, he gives me 100 rupees bill only. He does not give me discounts. So what this section covers 194R, that whatever benefit of perquisites. Now this perquisite is not salary perquisite. So 17.2. No, this is separate. Any benefit of perquisite which arises from business. In that sense, why Vasudevji hosted me to Visakhapatnam? He bore my expenses, my conveyance, my food, my travel, my hotel. So these are the benefits which are arising because of the business. Earlier, what used to happen, there was no TDS. Now they have said that even if you sell it at 100 rupees, whatever benefit you are giving me, which is arising from the business, you have to deduct TDS at 10% on that amount. Now, it is my first question when I read this was, it is absolutely difficult to ascertain this amount. For example, if suppose Vasudevji gives me a Rolex watch, in that sense, will be a market value to be considered, the price at which he bought will be considered, or the prevailing price on that day. It's absolutely open. We don't know how to consider that. So it's a very, I think they've introduced it is applicable from 1st April also. But I think a lot of clarifications will come in for this section because it talks about the benefits under 28 subclause 4, 28.4. And hence, if you see that any benefit is provided, 10% TDS will have to be deducted. I think and they have mentioned that this provision will not apply if the benefit does not exceed 20,000 rupees. Again, it is applicable, as I said, to one who is having a business of 1 crore and above, or a profession of 50 lakhs and above. Yes, as Shravanji rightly mentioned, that making linkage with business transaction is difficult. Sir, it is very difficult and very difficult to track. Now, how will you track it? Unless and until Vasudevji shows in the books of accounts that, I have given Rolex watch to Harit expenditure, then they will come to know that, oh my God, this is something which TDS has to be deducted. So they do deduct TDS because it is something which is linked to the business. It is a very gray area. I think a lot of clarifications or rules will be coming in this section. But I'm just going to give you broadly the overview of section 194R. Now, as I said, I will just briefly do it. Any person being a resident, 10% of the value or aggregate of such value benefit of proposal carrying on a business or profession. And you said it is it is up to 20,000 not applicable, and for individual HUF only it is if the amount exceeds 1 crore and 50 lakh rupees. This is what we discussed for 194R. And again, I said it can be wholly in kind, partly in cash, partly in kind, but I think it's very, very difficult to determine this amount. So now I think see the rationale that they have given. Again, I'm taking you to the finance, the memorandum of the finance bill. They have mentioned that as per clause 4 of section 28, the value of any benefit or perquisite, whether convertible into money or not, arising from business, is to be charged as business income in the hands of the recipient of such benefit or perquisite. However, in many cases, such recipient does not report the receipt of benefits in the return of income, leading to furnishing of incorrect particulars. To widen and deepen the tax base, they have now given the responsibility to Vasudev Murthy, to the person who is paying it. Okay, you would only deduct TDS. So if you deduct TDS, it will be showing in my 26AS, and accordingly, I'll have to disclose it as an income, or I will reduce my purchases, as the case may be. Yes, so 20,000 is per year or per transaction. So it is 20,000 is a, I think you will say it's per year limit. We'll just see to it here. If the benefit of perquisite is up to 20,000, then in that case, I think it should be a per year. I'll just check it here. During the financial year does not exceed 20,000 rupees. Then only it makes sense. Like every transaction, then we all are experts of splitting the transaction. So here the idea is during the financial year, the amount should not exceed 20,000 rupees. Now coming to 194S. Okay, we all know about the VDA, virtual digital asset. I think there's a question. It's a long question. We'll take it at the end. We'll take it at the end and we'll do it. Subramanian ji, we'll take it at the end. 194S talks about the payment of VDA, transfer of VDA. So now, as we said, virtual digital assets have gained tremendous popularity in the recent times. We all know about the Bitcoin, the ruble. There are so many different, cryptocurrencies also, which are being traded now. So the government in this budget also introduced a new section 115 BBH, which talks about the taxation of those digital assets at 30% flat. Now, correspondingly, apart from the taxation rate, they have also prescribed a TDS rate. The one who is purchasing will have to deduct TDS on that amount. So, the section 194S talks about any person responsible for paying to a resident. Again, the word is resident. Any sum by way of consideration for transfer of a virtual digital asset shall, at the time of credit of such sum or payment, whichever is earlier, deduct an amount of 1% of such sum as an income tax thereon. So 1% TDS on the value of payment or the credit, whichever is earlier. Now, the main point here is that provisions of 206 AB will not apply. As I said, twice the rate provision will not apply. It will be 1% only. Now they have specified something. If the consideration is payable by a specified person, then the limit is 50,000. If not by a specified person, the limit is 10,000. They've just specified these two things. So we have just discussed that now. So if you see here, no TDS if the consideration is payable by a specified person and the value does not exceed 50,000, and by a not specified person, the value does not exceed 10,000. Who is a specified person? We will discuss that. Specified person means an individual or HUF whose total sales receipts of turnover does not exceed 1 crore or 50 lakhs, as the case may be, during the immediately preceding financial year, and he does not have any income from PGBP. So both these conditions, if they are fulfilled, in that case, he is not a specified. He is a specified person, and hence 50,000 is the limit for him. If not fulfilled, then 10,000 is the limit for him. and the TDS rate is 1%. Again, it is on the VDA. Now, my question here that when I first read this section was that, for example, there are a few, if you read a definition of currency, they have absolute currency. Now, there are a few countries who have considered cryptocurrencies as a legal tender. I think there's a country called El Salvador in Central America. That country has declared Bitcoin as a legal tender. So it's a foreign currency as far as that for that country is concerned. Now, whether that will be considered a virtual digital asset or it will be a currency as a money, and whether TDS will be required or not, again, it's a very gray area. So these things I think will need some clarification, which I think the due course government will come up with. Now, 206 AB, again a very important section which came before a couple of years, and there was a change in this budget as well. So it starts the non-essential, notwithstanding clause that except a few provisions. Now this provision list has also been extended now. That if, for example, I think in a very simple language, if you are not filing your returns regularly, in that case, TDS will be deducted at a higher rate. So what will be the higher rate? Will be at twice the rate specified, twice the rates in force, or at the rate of 5%. So 5% is basically for 194C, because even the twice the rate of 194C comes to 4%. So all these three options, if you're higher of the rates, will be deducted in case. Now, what are the options where? Now, this is the changes. Now we are talking about the amendment. So specified person means a person who has not furnished the return of income for the assessment year relevant to the previous year immediately preceding the financial year in which the tax is required to be deducted. Now, for which the time limit for return filing under 139 has expired. So earlier, you see the one I have removed is earlier there were 2 assessment years were required. That previous 2 assessment years, if you are not filed and if you are having a TDS of more than 50,000 rupees, in that case, you are under 206 AB. Now, out of the 2 years, they have removed, and they have just mentioned that for the previous year, just 1 year, if you have not filed the ITR and your TDS amount exceeds 50,000, in that case, you fall under 206 AB. So now it's a simple thing. As of now, section 139 due date has expired for the financial year 2021, right? So if you're not filed the return for the financial year 2021 only, and your TDS in that year exceeds 50,000 rupees, in that case, you will be falling under 206 AB, and TDS will be deducted at a higher rate, twice the rate of the tax. Now, they have also mentioned here that a specified person shall not include a non-resident who does not have a PE in India. So even if you are a non-resident, you does not have a PE, in that case, you will not be required falling under 206 AB. So this is a comparison of 206 AA and AB. 206 AA talks about if you don't have a PAN, in that case, 20% higher rate, above this will be prevalent. 206 AB talks about you are not filing your return of income for 1 year and the TDS amount exceeds 50,000. In that case, twice the rate or 5%, whichever is higher. So these are 2 different sections. Similarly, for TCS, you have the 206 CCA. It's the same as what is for 194 AB. 206 AB. Now, in this budget, with effect from 2022, they have made the amendment. You can see the list of sections is now extended. So Krishna ji has a question that if the returns are filed after the due date. Okay, we will discuss that as well, Krishna ji. So so now they have, you can see the elongated the list. Now even 194 IA, 194 IB, 194 M are also covered. So if you are falling under these sections, then 206 AB is not applicable, even if the person is specified person. Now, as you said, I'll just read it out here now. Payment made to the following specified person. You can see on which TDS provisions will apply has not filed the return of income. Yes, for the assessment year relevant to the previous year, in which the required is required to be deducted, and TDS of TCS is more than is on that previous year. Now the question is, that as one of the participants also asked me that how what if he files the returns after due date? What if happens? So normally, before you go that, you can see 206 CCA as 206 AB is for the TDS, 206 CC is for the TCS. So if you are collecting TCS for a certain person and that person is not filed his return of income, in that case, again, the same provision of twice the rate of 5%, whichever is higher, will be applicable. Now, the question is, how will you come to know about specified person? Now, okay. So, I can see that they have the rationale given is that they have removed, because normally people, they have considered that, 1 year is a sufficient time. So now this is what I want to discuss about the compliance check. So I don't know how many of you in your offices have actually done this compliance check for your clients. I just want a yes or a no. Compliance check for 206 AB and 206 CCA. Anyone who has done it? Okay, well, I see one person doing it. Rest have not done the compliance check or in the process of doing or do not want to do it. I think it's a very important thing that we should tell our office persons to do it, either our articles or our staff or whoever is looking after TDS. I'll just show you a brief process here. Earlier, what was till the time the compliance check had come in, we had this provision wherein we were asking our suppliers that yes, we are asking our the person whom we are making the payment, that please give us your ITR, please give us your 20 days. You want to see whether 50 amount is there or not. It was a very cumbersome process. Now the government helped us in that. They come up with a utility, a functionality for 206 AB and 206 CCA. You can see here. I'll just show you by step how it is to be done. There's a portal. You can just log into this portal. There's a reporting portal. This you all will be knowing. Those who would have filed 61A as tomorrow the last date for them also. This is the same portal. So you can see here. You have to go to the reporting portal, register yourself as a reporting portal. You can see here form type and category. So you enter the form as a compliance tax director category, and after that you just have to fill in the principal officer details. Once you do that, acknowledgement receipt will be there. You need to log in with your PAN and the password that will be there on the email ID. Upon clicking the compliance check, you can see here. This is how it is. Either you can have an individual PAN check. For example, if you have only 5 directees, you can individually check their PAN whether they are specified person or not. You will come to know. Income tax helps you to provide that also. And if you have, let's say, 1,000 entries, in that case, a lot of entries. In that case, what you can do is you can do a bulk search. There's an option of putting data in the CSV file. Put the data in the CSV file, upload it here, and you will immediately get to know how many of your directees are specified persons and how many are not. Now, for example, I did in the month of, let's say, 10th of April, I did this for my client. There are 1,000 directees. What I do is I had put in a CSV file, I had checked the bulk search, and out of 1,997 are non-specified. So they have filed the returns on time. Only 3% are such who are specified persons and for whom I have to deduct TDS at twice the rate. So for me now, for the entire year, now what government has clarified in the clarification also, for the entire year, I'm not supposed to check again for those 997 persons. They're not specified persons at the beginning of the year. It means they'll be not specified for the rest of the year. Only for those 3 persons, I have to keep on checking whether they have filed the return, if they have filed the return on time. If, for example, they file the return, one of the question was, what if they file the return after the due date? If they file the return, then the name will be removed from specified person. So let's say they tell me that I have filed the return. Can you please check again? And then if you go and do a pen search, their name will be removed from the specified person. So then you'll be having 998 as okay, and only for those 2 you will have to deduct TDS as a higher rate. So this functionality is very important. I think we all should be basically checking this functionality at the beginning of the year. And for those who are specified, like for those for whom we have to deduct TDS at a higher rate, even during the year when they say that we have filed, we have to check this to know the taxation rate. It's a very easy utility. You can train your staff or articles to do this. It's a very simple thing. I hope it is clear now. Now coming to 190 Finance Bill 2021, the Finance Act 2021 now in fact. 194Q we have already discussed. 194P, again a section which is for specified senior citizens. It talks about that if you, for example, if you're getting income from a specified bank, and if you are, let's say, you are 75 years or more during any time of previous year, you are having income from pension and no other income except the interest income from that bank account only, in which you are receiving the pension. In that case, if you give a declaration to the bank that this is my total income, they will deduct TDS under 194P, and then you need not file your returns of income. That is for senior citizens only. That is a benefit that they were given in this act. Now coming to Finance Act 2020, as I said, there are small changes in a lot of sections. So we'll go to each section now. 194A. So the amendment here was that normally we say that any interest paid or credited by a cooperative society to the member In that case, TDS was an exemption. There was no TDS, but they have added a proviso that provided the cooperative society referred to below will have to comply with TDS provisions if the total sales exceeds 50 lakh rupees. The total sales exceeds 50 crore rupees in the immediately preceding financial year, and the amount of interest is more than 50,000 rupees. So if these two conditions are fulfilled by the cooperative society, in that case, they are out of this exemption and they will have to deduct TDS. Now coming to 194J, very important amendment in Finance Act 20 was that now on technical services, TDS it is to 2%, and royalty was 2%. Now only for professional fees, for professional services it is 10%, and for the, as we all know, for the call center again it is 2%. Now 194N, I think this chart will basically explain everything. 194N in nutshell. We all know it is about TDS on withdrawal, cash withdrawal from the banks and post offices. So if you see the first layer, when to deduct at the time of payment and last 3 years. So what happens? Who is the payer? A banking company, a corporate society, or a post office. Who is the payee? An individual, HUF company, partnership firm, or LLP. Anyone is easier the payee. At the time of payment, deduction has to be done. So we have to see whether last 3 years ITRs have been filed or not. If they have filed ITRs for the last 3 years, then if the amount exceeds 1 crore, then 2% on the amount. For example, if you withdraw 1 crore 20 lakhs, then on 20 lakhs, 2% TDS will have to be deducted. Now, suppose you have not filed ITR for the last 3 years, in that case, there are different limits. Up to 20 lakhs, nothing is to be deducted. 20 lakhs to 1 crore, 2% is to be deducted, and above 1 crore, 5% is to be deducted. So this is a change in the TDS rates as far as the 194N is concerned. And I think all those who are having the clients who are withdrawing cash, for example, transport industry is very common. If you're having a client in a transportation or logistics industry, they withdraw cash to make advance payments for diesel, advance payments for the laborers. So in that case, these kind of withdrawals will keep on happening. So the tax rates, again, as I said, it depends upon whether you have filed returns or not. And this chart will basically explain you that. We will skip this section. I think everything was explained here only. Now coming to this examples, you can see 194O. Again, I will explain you this with the help of an example. We will just read this subsection 1 first. You can see that nothing contrary in this, nothing, notwithstanding anything contrary to the contrary in any of the provisions of the part B of this chapter. Part B deals with the TDS. So Venkata Rajuji has a question: how do we know whether IT return filed or not? Any link is there? So if you're talking about the 206 AB, I think as I said, you have to check the functionality. As I said, it is available. You just need to mention the PAN number of that person, and you will get to know whether he is a specified person or not. So income tax department will automatically calculate, the 50,000 limit, the ITR whether filed or not, and then you will come to know whether it's a specified person or not. Cooperative bank payment made to cooperative society, whether 194N applicable. I think yes, it is applicable. I just need to double check it whether there's any exemption. But prima facie, yes. Now coming to this section on the 194O, as I said that normally we all know e-commerce operators. Again, giving a simple example. Let's say there's an Amazon, and if I'm selling something on the Amazon, and Amazon in turn pays me that amount. So Amazon is an e-commerce operator, which is basically providing a platform or a facility to buyer and seller. I am an e-commerce participant because I am basically using that platform to sell my goods. So in that case, if I transact anything through Amazon, so whatever Amazon the e-commerce operator pays to the e-commerce participant, in that case, TDS at the rate of 1% will have to be deducted by Amazon. So if suppose Vasudevji purchases something from Amazon from me, he pays the amount to Amazon. Amazon gives that amount back to me. In that case, they will deduct 1% TDS to the e-commerce participant. And the only exception here is that the amount should be more than 5 lakh rupees. So for small traders, small businessmen, they need not worry. But for the bigger players, 1% TDS will have to be deducted on that. Now some certain, I think these terms we have discussed now. Okay, just a minute. I think you can see they have given the examples also. You can just go through it. Examples also. Okay, now a few other amendments before we go to the question answers now. Talking about 194 IC, I think payment under specified agreement. So what happens This we all know. 45 5A was amended recently, wherein under JDA there is specific provision for that. We'll discuss that. And 194M, a very very important section. I think most of the members also forget that there's a section called 194M. We'll discuss that also. So what does 194 IC says? 194 IC says that notwithstanding anything contained in 194 IA, any person responsible for paying to a resident any sum by way of consideration, not being consideration in kind. So if there is a kind, unlike your section 194R, where we talk about the benefits of purchases in the business, even if they are in kind, it is to be TDS has to be deducted. Here, not being in kind, under the agreement referred to in subsection 5A of 45. So as you all know, under the joint development agreement, which is under 45 5A, shall at the time of credit or payment will deduct TDS as a rate of 10% on such income tax thereon. As a income tax thereon. So any amount which is paid under the specified agreement, you have to deduct TDS when the payment or the credit whichever is earlier, that is to be done. Now you can see here, I'll just take you through that important. Yes. So as you all know about the JDA, the owner of the land gives, there's a developer, there's a concept of JDA, we all know. So whatever amount is paid to the owner, in that case, 10% TDS will have to be. There's a new provision introduced in the Finance Act 2017. Now, coming to a very, very important section, any person being an individual or HUF. Now, you have to be very clear. If you are under section 194C, 194H or 194J, meaning thereby that if you are having a turnover exceeding 1 crore, the professional income exceeding 50 lakh rupees, in that case, you are out of this 194M. 194M is for those who are not falling under those sections. So if you are an individual or HUF, and if you are responsible for paying any sum to a resident for carrying out any work, so including supply of labor work, in pursuance of contract by way of commission or brokerage or professional fees. So there are four things. If you have any contractual obligation, if you have a commission expense, if you have a brokerage or a professional fees during the financial year, and that amount is exceeding 50 lakh rupees, in that case, you will have to deduct TDS of 5% on such sum. Right? So here it comes 50 lakh rupees. Yes. So in that case, so if, for example, if I'm a salaried person and I am making up, I'm basically taking in architectural services for my office, and I'm not falling under the limits of the 194J or somewhere C or whatever. In that case, I am supposed to deduct TDS at 5%, even if the amount exceeds 50 lakh rupees. Now we have a few questions here. Let's take the questions here. Yes, so there's a poser prepared for this. Now I would like all of you to answer these questions. If the TCS amount is 4.25 in a presentation, I'll just check the presentation, Sharvanji, once again, the list. Shizaji has asked, sir, if the TCS amount is 4.25 lakhs, still we need to deduct. TCS amount is, I'm not getting this question. Okay, Shizaji, you can elaborate it here. So we will take this proposal on 194M. So X is an individual. He makes the following payments to a resident consultant or a resident contractor or a work contractor, whatever you consider. The amount of payment is 27 lakhs on 10th August and 26 lakhs on November 22nd. The following situations are examined. Now, you just, I want the answer for each situation separately. X is a businessman. Turnover of the business is 15 crores. Payment to consultant is for business purposes. Now, whether it will fall under 194M or under which section? Shravanji says no. No. So answer question is whether it will fall under 194M or the respective section. You're saying no under 194M. Yes, so answer is that only. The answer will not fall under 194M because since it's a businessman and he has a specific obligations under 194C. So if it's a contract, you will have to deduct contract TDS and contract. If it's a professional, then TDS and the professional has to be deducted. It will not fall under 194M. Now coming to second situation. X is a businessman. His books are not audited in the immediately preceding financial year as turnover is lower than 1 crore. and the payment to consultant is for business purposes. Whether TDS will be there under 194M or not. Yes, 194M is applicable here because not under audit. This is a very common scenario. If you're not under audit, or you are a salaried person, or you are a businessman who is not having a lot of turnover and all, but you have to consider this, that you will have to now follow. If you make a payment exceeding 50 lakhs, here the payment is 26 plus 27 comes to 53 lakhs. Now coming to third, payment to a consultant for personal purposes. The amount is not deductible number 37.1. Now what to be done? Not required. Okay. Any other opinion? So I think if you read this section, not required since for personal purposes. Yes, but if you read this section, 194C or 194J, they have categorically mentioned that for personal expenses, 194C and 194J are not relevant, not applicable. In that case, TDS will have to be deducted under 194M. And last is X is a non-resident. It's a foreign citizen. He does not have any income in India. Whether this payment is for, and the payment is for personal exposure, whether he is liable to be deducting in the 194M. Any exception to non-resident? Did we read this section? So there is no exception. Even if there is a non-resident or a foreign citizen and he does not have any income in India, still for this payment, he will have to deduct TDS under 194M. There is no exception to this. And the last question, X is a farmer. His entire income is exempt under 10(1), and he makes a payment for personal expenses. Whether it will be applicable? Again, the same logic. There is no exception to persons who are exempt. In that case, TDS under 194M would be applicable. These are the solutions. I think you can just go through the solutions in that case. Okay, these are circulars that we have covered. I think there was a recent circular, I think on 17th of May as well, that we discussed in the functionality. In that case, what they have clarified is that this amount, this 1%, 1 year, the functionality of the government has now been modified. Earlier, they were considering 2 years and 50,000 as a limit for the 206 AB consideration. Now the functionality is modified and they are only considering 1 year as per the amended sections. There was a circular which was issued on in the 17th of May 2022. There are various circulars. I think we have discussed this. We have discussed these circulars as a form of our FAQs also. I'm just reproducing here for the sake of clarity. If you want to read this, all these things we have discussed it earlier. Just a few practical problems that we face day in and day out. I think this is a very common thing that we face. I want you to answer this now. Suppose the amount of deduction is 5,000. Payment date is 28 January 2022. Deposit is 7th of March. How many months do you calculate for interest? Date of payment is 28th March and the date of deposit is 7th of March. 28th of January, the date of deposit is 7th of March. So normally, how many months do you calculate for calculating interest into 2011? 2 months is mentioned by someone. Yes, 2 months is the answer. Venkataraju says 3 months. Okay. 2, 3, 3. Okay, so yeah, it can be either 2 or 3. Yes. Anyone can write here why 3 or why 2, because it's a very common question that we all face normally. Anyone can specify that why 3 months? Okay, Ashokji, if you can, if not deposit in time, then okay. So Jan, Feb, and March. Why Venkatesh, you are saying that Jan, Feb, and March? Because not remitted in time. No, that is true, but still, even 1 day delay can be treated as 1 month. Yes, very rightly mentioned. So that is basically again something which we all should represent. We have already done earlier that even if, unlike GST, where it is calculated as per days, even if you delay for 1 month, they will be considering the full month. So in this case, 28th January, Feb, and March, 3 months will be considered for an interest levy. That is again, normally people calculate for 2 months. In that case, the notice is received. So you have to be very careful. Till the time the act is amended, we'll have to take this, because the wording here is 1.5% from the date on which such tax was deducted to the date on which tax was actually paid. So was deducted in the month of January. So January is considered. Paid in the month of March. So Jan, Feb, March. 3 months interest is to be considered. Now, okay, last question now, since we all are practicing CAs mostly, I think we are there in the session. Mr. ABD is a practicing chartered accountant. His gross receipts during the previous year was 55 lakhs. He wants to make the following payments during financial year 22-23. Now, advise whether TDS is to be there or not, deducted or not. 95,000 to a contractor for repairing of flat exclusively used for residential purpose. No, because personal. Okay. Avinachi, no. So you can note it down. If answer for one is no, is most of you are answering. Okay. So you can see 55 lakhs is subject to tax audit. 194M is not applicable, yes, because he is already falling under this. So second, 78,000 to a contractor for repairing his office. 194C, yes, exactly, yes, Yashvi, good one. Ashokji, good one. I think 194C. So you can see if the individual amount is more than 30,000, in that case, yes, he is liable for 194C. Third, 1,05,000 for a hospitalization to a hospital for his operation. Same as A. Okay, personal. Yes, the answer is right. And the last is 2,50,000 to a landlord towards rent of flat exclusively used for residential purpose. TDS will be there. Okay, so no, 5% in last month. Okay, but sir, is 55 lakhs, the amount is exceeding 50 lakhs. He is not there. Okay, so you can see the answers were almost right, but there's a section, there's a proviso. This says that no individual at HUF shall be liable to deduct TDS on the sum paid or credited if such is exclusively for personal purposes. So they have clarified in this section that if the amount is paid exclusively for personal purposes, in that case, TDS will not be paid. And now this paragraph basically falls only in 194C and J. So as you said, for your the hospitalization and for the personal repair of the house, in that case, TDS will not be deducted. But if you talk about the last thing is the rental income, in that case, this paragraph in 194I, this paragraph is not there. This is a very thin reading. I'm not telling you that people will agree, but if the officers are in this session, they'll get to know. But normally, if you read the section 194I, this paragraph is not there in 194I. Hence, strictly reading, he is liable to deduct TDS even under 194I in this case. It's a very, very thin line. But yes, this is something which is there in the act, like it's not there still in the act. Now, coming to the conclusion, I think before I conclude, I think I'll take a few minutes now to come before I conclude. Something about the TDS. We talk about TDS is all about the DPs that we normally use. There are multiple meanings of DP, but for us, the most important thing is when we talk about TDS, we'll have to first, D stands for the deductor has to carry out a lot of actions. So all the action has to be taken by deductor. Decide whether the transaction will be covered under TDS or not. Determine which section is important. Now, very, very important. As I said, there are so much multiple, transactions. You have to determine which section it falls under. Deduct payment, whichever is earlier. Due dates are very important because interest is very heavy. Deposit and deduct and deposit within due date. Correct description in the return is very important. TDS certificate, as I said in the beginning, download them if you are still the penalty is still there. Now, next is deliver to the after downloading, deliver to the person. And obviously, last is you have to be dedicatedly upgrading about the TDS knowledge because the things are changing very fast. Now, for the P comes for the penalty. I think the biggest thing we all know, interest is very heavy. If you don't file the returns, the 200 rupees per day fees is also very heavy. So don't presume anything. Normally, what happens, we have our staff presuming that the pen will be there. I'm not liable to deduct TDS. No, get everything in writing, get everything on email. Penal interest, I said 1.5% is very heavy. Late penalty is 234E is again very heavy thing. Nowadays, prosecution notices are getting issued to the directors of the company. So be very, very careful. Publicity. Now, I think they are also publicizing in the news that, the such and such company has defaulted. So that is again negative publicity that you get. So obviously, as I said, that penny wise, pound foolish. We have to, rather than having the 2% TDS, you end up, disallowing your expenses by 30%. So be very, very careful as far as that is concerned. So, just I am just reminded of what Narendra Modi had said during the COVID era. I'll just, read the ones which are highlighted. That he said about the vowels of the new normal, because like vowels in the English language, that would become essential ingredients of any business model in post-COVID world. This pandemic is sure to rewrite the rules of business. So he had mentioned this AEIOU of the new normal, and in that A stands for adaptability. Now, even as professionals, we have to be adaptable now, because nowadays there's an old practice of getting everything on as a hard copy to our offices, not getting on emails, not getting digitalized. I think we have to now adapt ourselves to the new normal. Efficiency, I think we have to improve our efficiency, not only for the TDS provisions, but even for the per se, we'll have to for the law, for the even when you talk about the, let's say about the finalization of the accounts, everything will have to be more efficient now. Third, inclusivity, yes, very important for all of us. Opportunity, I think CAs are having wonderful opportunities now. Apart from the TDS and our income tax and GST, now a lot of CAs are going into FEMA advisory, into outsourcing, into RERA. There are so many new avenues where they can practice. And then, yes, the global relevance. Now we should make sure that we as startup accountants have that global relevance and application. And we not only think small, we have to think big now, because we as a community can really, really grow big. So this is something which I want to conclude. A very, very good image that I always like to conclude with is about the old story that we all knew. This is a story of the crow, which throws in the small pebbles and the water comes up and the drinks. But now we'll all have to become like a modern crow. Every day we have to update ourselves. We have to act smart. We go on the things where we can just stay back and sit normally. We have to be on the toes every day. So let us all be strive towards becoming a modern crow. So with this, I think I'll take any questions if you have. We have time for 15-20 minutes of question answers if we have, and then we will conclude the session. And thank you everyone for the patient hearing. And if you have, yes, I think there was a comment. I will share the PPT. I will share it with the chairman, sir, and he will share it with all of you. Any other questions that you have, I will be happy to take them right now. And my contact details are there in the PPT. So even after the session, if you have any questions, you can get back to me anytime. Thank you so much.
Members, please, any questions are there, please unmute yourself and ask the questions. Sir, one more question in chat box, sir.
There's a question on the foreign commission. I think you have to be very clear if you're making a foreign commission, and if the person who is residing out of India is not a resident of India, is a non-resident, is not having any business profession or any permanent establishment in India. In that case, if you're making an export payment commission for the export outside India, with the person is not having any income in India, in that case, no need to deduct TDS. There are a lot of circulars and judgment also for that. Provided, yes, I said, he does not have any PE in India. In that case, no TDS is to be done. Thank you, Avinash, for your comments. Thank you so much. Any other question that we have?
Sir, please ask any questions or any clarifications we require. Harit Dariwal ji is available with us because he has shown the one picture. We have to drink.
Thank you for the comments. Yes, Ashok ji, is TDS applicable storage charges paid to banks, sir? Storage charges, exactly with nature it will be, because it depends upon what is the nature of the transaction. Then we can take a call on that. For keeping bullion. Just a minute.
Sir, Vishesara, Edo.
Namaste.
Sir, Edo.
Sir.
Please ask, sir.
Sir, we have one small query, sir.
Yes, sir.
This is regarding a person has entered into a sale agreement. So with a resident person, both wife and husband are sellers, and he has given an advance more than 50 lakhs. So he had been to foreign due to this COVID. He was there. Then he became a non-resident. So he wants to get it registered only after they come back. So when they come back, the reality is a non-resident. Now, what is the rate of TDS to be deducted, sir? Is it
Sir, they are the
resident or
seller or
non-resident
they are
status?
the seller or they are the purchasers?
Sir, the party has come to me is only a purchaser.
Sir.
Okay, so
So
they
it
are
is
talking
a-
about so sir, the party is a purchaser purchaser is a resident in country, right?
yes.
Yes,
Purchaser is a
so
resident.
it's a resident. So when we
Seller
talk
is also
about
resident when the agreement they entered. Today they
Yeah.
are coming for registration. So
Yeah.
now he became a non-resident.
Okay. Sir, ideally, I think to be in a very strict sense, they are non-resident when the TDS is to be deducted. So when we talk
Yeah.
about, agreement was a formal thing when they entered into, but when
Yes.
they actually pay the consideration, when the actually transaction happens, they are non-resident. So
Okay.
in my view, again, sir, it should be that, it will not fall under 194 IA. It should rather go to 195 because
Okay.
the seller is a non-resident.
Mhm.
In that case, it will not fall under 194 IA. But still, I think there is no precedent. I have not come across any judgment relating to this kind of transactions. Because it's a very
Sir,
difficult
my
case.
interpretation, what I have done is, in this case, the 194 IA, it speaks the credit or payment, whichever is earlier. So whether it is advance or final sale payment, it's a different story. To that extent, he has to do it under a resident column.
Absolutely.
The balance at the time of registration, you should do at the rate of 30% or 20% or actuals, whatever it may be. So for 195, there is a problem, sir. 195, it is not the sale consideration. It is the
Exactly.
income portion included in it.
Absolutely. Yes.
Whereas here, for resident, it is only sale consideration.
Yes.
So because we have already deducted tax at source for the payment already made,
Sir, was the payment made when the agreement was first entered into? Was the payment made?
the total payment is 1 crore, sir. It is 50 lakhs they paid.
When they were resident?
No. When the agreement is there, they paid 50 lakhs.
Okay.
On agreement date also, I insisted them to pay the TDS because the 194 IA speaks
Yes.
payment or credit, whichever is earlier.
Yes.
Whether it is executed or not, that's a separate story. So
Yes.
we deducted as a resident.
Yes.
Today, finally, when they come for registration, it is 195 is applicable.
So, sir, for the amount, as you rightly said, for the amount that they have paid earlier, that time they were resident.
Yes.
So it has to be 1% at that time.
That time.
But for the balance portion, it cannot be 1% because they are not
It
resident.
cannot
now.
be 195 is applicable now.
Yes. So maybe you can go for a lower deduction if you want to have this is the only
Yeah,
option.
we have to
that
go
you
for certificate. We have to go for a certificate
there is
and
no
then
other
explain
option
everything.
available for that.
Yeah, this is what now filing part of it, whether resident and non-resident have come in 2 different years, no problem. But
So
the final
this will happen
conclusion
because
is we may invite a problem. Otherwise, unless we get a certificate, we get a problem. Okay, sir. Thank you. Thank you very much.
Thank you, sir.
Very nice.
Excuse me, sir.
Yes, sir.
So there's one more question from another member. So there's a little bigger question. So I'm just posting in the chat. Can you please resolve it?
Just a minute.
Sir, I have a question, sir.
Yes.
Actually, employer has not deducted tax on the salary he has paid. Actually, he is a government deductor the whole year. And actually, in the month of February, rather than deducting tax, the employee is directly deposited in his PAN number rather than in the TAN number of the organization.
No, sir. Can you come again? You're talking about the TDS on salary, right?
Yes, sir. TDS on salary. Actually, government deductors. So actually, the whole year they have not deducted any tax. And at once, what they have done, actually, his tax liability is almost 1 lakh rupees.
Okay.
So in the last month, like the month of February, the salary which is paid in March, his salary is only 50,000, around 50 to 60,000 per month. So since it's more than the salary, what the employee has done is directly deposited in his PAN rather than the employer depositing in TAN number. So actually, what is the now option for DDU? Because he will be getting a notice that is not deducted the tax.
Right.
So any other way out to escape?
No, sir. I don't know why this was done. Normally, in the month of Jan, Feb, March, he could have apportion, no, that way.
Yes, no, actually they should have done from the first month itself. But usually the
No, even
government
if-
deductors and state government deductors at Odisha, what they do, they deduct at once in February and maximum January, 2 months only, rather than apportioning it over 12 months. So now, is there any way out for the DDO to escape this?
It will be
notice?
difficult. No, it will be very difficult because normally we also advise that in the month of Jan, Feb, and March you apportion it. That's the only practical
Best
way
thing,
of it.
yes. Best
It's
thing.
very difficult. Otherwise, there's the only option is to approach the traces in the TDS. Because, sir, I don't know about your state, but normally in Ahmedabad, we in the TDS office, we have a few, kind of nodal officers, wherein they support us with these kind of queries.
Okay.
So maybe you can approach your local TDS officers and if they can help in this.
No, sir, I think in this, like some provision is there in which, like, if the employee has deducted, he has deposited the tax, then in that case, I think employer will be, means he shall get the relief.
No, but the primary liability is of the employer only, no?
Yes.
I got your point. Normally, it happens like that if the employee himself has paid the taxes and if he produce certificate, that's a different thing. But
Okay.
here the employer himself is liable for deduction of TDS, na? That is the
Yes.
issue. So maybe you can approach your local TDS officer. They can guide you in that manner. Sir.
Okay. Thank you. Thank you.
Yeah, fine.
Another question is there, sir, in chat box. I think some big question.
Just a minute. I'll just read it, sir.
A company made a provision for interest on some loans. Though there was no liability as the loans were not. No liability as the loans were not interest bearing, nor there was any claim. That is provision made erroneously. But no entry is made for TDS. In fact,
no. So I think, sir, the one who has raised it can just unmute and we can discuss because I am not able to get it because what he has said is that they had made some entries which were erroneous and in future they had reversed it.
Yes, sir.
Yes, sir. Your question, are they in two different financial years?
There are two different financial years, that is.
But then you will have to then substantiate that why those entries were actually made in the first place. Because
That is
if you made it, sorry?
Judgment is there, that's what we, I'm just asking that.
Sorry, sir, I'm not able to hear you. Hello?
Hello?
Yes, sir.
Is there any judgment on this, any previous cases or anything is there that like same content, that same case and all?
Sir, I'll check because normally what department will take a contention is that once you have credited the entry in the books of accounts, TDS will be due for that year.
Yes,
right?
yes, yes.
Now, with that contention, they'll be asking you for recovery with the interest and all. But as you said that it was erroneous and it was reversed in the later years. So I think, sir, I'll have to check if there's any judgment with that record. I'll check and I'll get back to you. If you can just drop me a message or something on my mobile number,
Okay,
I'll be in touch with you for this. But I doubt that there will be entries because normally now I think if you see that even in the caros, this kind of things will be reported because it's something which is not there when the books of accounts are there. So something will be linked. But I'll give me some time. I'll see if there's any judgment. I can help you in that. I'll just search for that.
Definitely.
Yes, one question is there on the 194Q. I think yes, if TDS is not rejected, then there will be a disallowance. There is no exception on that.
Sir, there is a big question, sir. Please see in the chat box.
Just a minute. The same provision, same question, no?
A company made a provision for interest on some loans.
That we discussed. I think we discussed with Subramaniam ji. I think Subramaniam ji, we discussed with him.
He is Ranga, sir.
Just a minute. Sir, you're talking about this erroneous entries one, no?
So Subramania also has posed this question, sir.
Yes, sir. He's also posed the same question to me on the direct mail. I think we were discussing with him on the same thing right now.
Yeah. Okay.
That realized their mistake and reverse the entry. So he was asking about the judgment. So I'll just go through and if I have any supporting, I'll just share with him.
Okay. Another question is that if TDS was not deducted under section 194Q.
Yeah, this I've done. In that case, the disallowance will be there. You have to be very careful. Disallowance will be there.
Sir, members, any more questions are there?
So if the TCS is collected and not filed the returns, what will be the case? And the TCS is remitted.
Sorry, what you are saying?
TCS under sections form 6CR TCS on sale of goods. It was collected and remitted. Okay, but the returns are not filed.
Returns are not filed.
Yeah, TCS returns are not filed. What will be the case with the consequences?
Sir, TCS returns are not filed, then I think apart from that penalty of 200 rupees that will be there, the TCS credit will not be reflected. So I think you will have to tell the, let's say, I think now even the portal there's an option of raising a complaint. Earlier, like we have for the TDS, they have a portion where you can raise a complaint that TDS has not been deposited, and we can also intimate our local TDS officers also. That can be done.
Well, if the case is TCS collected and remitted, it was remitted, but returns are not filed.
So, but sir, unless returns are filed, how will you get the credit?
Yeah, that's what I mean. Now, if for the past 3-4 quarters they have not filed, can they file it now with penalty or whatever?
Yes. Sir, they can file the TCS returns. Even for the earlier quarters, they can file. The only thing is now they will be having a penalty of 200 rupees for the returns, but they can file.
And the penalty amount is capped, is it to a maximum is to the extent of the TCS amount, right?
Yes.
Whichever is lower, right?
Yes.
Okay. Thank you, sir.
Sir, any other question? I'm just putting my email, my mobile number there in the chat box.
Any other questions are there, sir? Please.
And my email ID is also there. So if you have any case, you can also drop me on email. I'll be happy to reply. I just put my number there, and it's on the WhatsApp, and my email ID is also there. So any other question we can discuss anytime.
Okay, sir.
Yeah.
You know that you are always available in YouTube. So many YouTubes are there.
Sir, anytime you can get back to me. No problem, sir. Thank you.
So thank you very much, sir. That really you have come to our rescue. That you have excellently and deliberated the subject. And in 2020 you have come. So virtual, but we want you in physical side, physical mode. Once we plan in physical mode on some other subject, not only subject and some other subjects, sir.
It will be my pleasure to come, sir. Thank you, sir. Thank you so much.
So really, thank you very much, sir, for within a short time that you have given us, and because of your love and affection on us. Because previously Kumar sir also used to remember you.
Thank you, sir. But I'm so happy with the kind of activity, sir.
Also to remember you. So all people, Visakhapatnam people remember you, sir.
Sir. Thank you so much, sir. And I'm very, very happy to see the activities also which are being done by your branch. I was recently the GST series that you were discussing. I think it must be a very big hit there because it's a very much needed series, sir.
Yes,
so great efforts taken by you and your team. I think I'm sure it's going to be an amazing year ahead. All the best to all your team members also who are there, and of course, best of luck to you also for the entire year, sir. And whenever I would be of any help, do let me know, sir. Thank you.
Sir. Now I request
thank you,
Secretary sir to propose vote of thanks.
Good evening, dear members and participants, the members of the managing committee, and the learned speaker of today's session, CA Harit Dhariwalji. I would like to thank you on behalf of the members of this branch as well as the managing committee for your wonderful presentation and for having shared your views and for making this session a quite interesting one through your questions and answers. And I would also like to thank you for having taken up the questions of our members and having addressed them. On behalf of the branch, we would like to thank you very much, sir, for your presentation, and hope to see you on a physical mode. Thank you very much, sir.
Thank you so much, sir. Thank you.
Thanks a lot.